Yolanda. Shh, y'all be quiet. I'm starting the live stream now. Shh. Stop talking. Y'all gotta stop talking. Cause I don't want nobody to hear us talking in the background. What's going on, everybody? How y'all doing? I couldn't find my I had the music player from myself. I couldn't find it. I couldn't turn the music. Y'all couldn't hear, but I could still hear the music. It was all up in my ear, man. I forgot to hit y'all with my disclaimer. You know what I'm saying? You got disclaimer. For those who don't know, disclaimer. I mean, hey, who remember back in the day? Who remember back in the day when my mom used to be like, "Do your disclaimer"? Who remember that? Y'all remember my mom used to be like, "Do your disclaimer." That's throwback. That's throwback. Nobody in here probably don't remember that. Who me see? He'll learn to share here. She probably remember that. Who else was in here back then? Rhonda, maybe. Yeah, Rhonda was here. Mom used to be like, "Do your disclaimer." How y'all doing, man? Y'all pull on up in here. While I'm waiting for y'all to pull up in here, allow me to say, if this is your first time tuning in to Tim's Tidbits, welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. I don't have a big background, but y'all know, like I always tell you, my homeboy, Big Spider, ain't never fall. Never, always there. You hear me? And you are now in tune to another episode of Share Screen, Please. Intraday price action recap. You feel me? Who that is, put something in the chat. Pop the chat out. Hey, where is the Asian link to sign up for it? It's in the place it's always been. In the y'all be want me to remember stuff. It's in the, is it the announcements channel? Gang. It's in the, I think it's in the announcements channel. Let me see. Oh, I got the Discord open. I'm tripping. It is in the announcements channel. Yes. For the gang, it's in the announcements channel. For non-gang members, if there's anyone here that's non-gang, it's pinned to the chat to participate in the Conquer the Asian Sessions workshop. And it's the first link in the description below. That's for non-gang members. Gang. If you want to sign up, it's in the announcement section. For the gang, matter of fact, since we talk about it, let me put the pictorial back up again. Y'all, I closed the picture. Y'all saw it when the music was playing, right? This episode of Tim's Tidbits is being brought to you by Concur the Asian Session. That boy can't read. Conquer the Asian Session. Join me for a 2-week intensive video conference. Unlock the secrets of the Asian market using ICT concepts. Deep dive into ICT. Tailored strategies for Asian session success. Learn multiple high probability techniques. What are these high probability techniques? One of them is the OTE. I'm going to break down OTE in a pre-recorded video so you can understand OTE. One of them is the Asian model that Michael broke down for his son Caleb, the Asian model. And then one of them is going to be a model that I used to use myself. I call it a sweep of prior session liquidity. That's all I call it, a sweep of prior session liquidity. Those are the 3 models that we will be, while we're studying price, we will see if any of those pan out on a night-to-night basis from May the 12th through May the 23rd, is it? Yes, from May the 12th through May the 23rd. And it is on sale right now for everyone. Gang, been able to purchase it since the 1st of April. And I dropped the link for everyone else last night. For non-gang members, it is $250. For gang members, it's $100. Right? Gang, your link is in the Discord in the announcements. If you use the link that's pinned to the top of the chat, if you use the link that's the first link in the description of this video below, you will pay $250. And I don't want you DMing me talking about, Tim, I used the wrong link. Can you give me a refund? No, I can't. Your link is in the announcements channel. Take advantage. Right now, as of this morning, there's only 8 slots left. There's only 8 slots left as of this morning. It's not one of those things where, oh, you only got limited slots. No, it's only 8 slots left. It'll be on sale until April 30th or until those 8 slots disappear. If those 8 slots don't go anywhere by April 30th, don't hit me up on May the 1st. Talk about, Tim, I was out of town. Tim, I had diarrhea. Tim, I was sleeping in late. Tim, my dog ate my homework. Tim, I just got a new job and my work schedule got me all thrown off. Tim, I got vertigo and I feel dizzy. Tim, I was kind of thirsty and I had to go to the well and draw water. Tim, nothing. Don't hit me up on May the 1st talking about that. Either when the 8 slots run out or April 30th. That's it. And I'm going to start dropping the pre-recorded videos. No, I have not started recording the videos. I've been busy. I have not started recording videos. I've been busy. The video's going to get recorded. I posted something inside the Asian chat last night. I actually was trading last night in the Asian session, and I was using like a combination of 2 of the models, right? I was using a combination of 2 of the models. And I shared a screenshot and what I did. And somebody asked me, hey, Tim, how did you know that? And I gave him the Cliff Notes version of it. You know what I'm saying? But I was just putting it out there. It's not a signal service. I'm not telling you to go trade. This is for people who work a 9 to 5. Don't like to get up in the morning, for whatever reason, can't sit in front of the charts during the New York morning session, right? We're studying the Asian session to learn how to identify signatures, algorithmic signatures, understand order flow and price delivery, so that once we get these things ingrained in our head, we can then decide to trade or invest in a discretionary manner. Because once you understand these things, you can apply it to day trading, swing trading, long-term investments, whatever you want to do. Because y'all already saw it. We broke it down using yearly charts, monthly charts. You see the concepts, they always work. They never stop working. No, they don't. They're just like those little doozers. Remember on Fraggle Rock, them little doozers? They used to work all the time. They used to go and they make the doozer sticks and the Fraggles come through and eat them and break it up. And they'd be like, yay, we got more work. The algorithm is just like little doozers. Never stop working. Okay. That's who it's for. Pull up. If it sounds like something you're interested in, pull up. Y'all already know where the link's at. Now, I didn't shout out who here. Y'all drop something in the chat so I can shout you out. We got Deborah up in here. We got Yolanda up in here. We got D up in here. We got Jim up in here. We got Lump up in here. What's up, Sharoni? We got Seawalk up in here. We got who that is that I can't see over there. I see Kim. Something is blocking. We got Rhonda Green. We got Here to Learn and Share. We got Kim. We got Honey. We got Venus. We got Thomas. What's going on, everybody? How y'all doing? 1, 2, 3, 4, 5. I see more numbers than I see names, but that's all the names I see. That's all I'm going to say. All right. Did Price do anything today that surprised anyone? Did Price do anything today that surprised anyone? What's the moral of the story for today? What's up, Kashaya? What's the moral of the story for today? Somebody in the gang, tell me what's the moral of the story for today. What's the moral of the story for today? Somebody that's in the gang, tell me what's the moral of the story for today. Nobody? Nobody? You mean tell me nobody pays attention when I be sharing stuff? Are my feelings about to get hurt? Are my feelings about to get hurt? Are my wee little bitty feelings about to get hurt? Thank you, honey, for running off and reading it very quickly. I already know you ran off and read it and then came back. The moral of the story is that the market will humble you. How quickly, honey? How quickly will the market humble you? Joshua reminded you. Same thing. Joshua reminded you, or you running off and reading it real quick. Deborah, why didn't you know that? Yolanda, why didn't you know that? D, why didn't you know that? Jim, why didn't you know that? Lump, why didn't you know that? Seawalk, why didn't you know that?
Because it's a lot of morals.
I said for today.
It could have been, don't chase after price because there's always a trade to get.
What was the moral of the story for today? Today. I didn't say another day. I said today. All right. Did Price do anything that surprised anyone? Let's see where we are on the weekly chart. Did Price do anything today? Oh, look at there. Where are we on the weekly chart? What are we hanging around on the weekly chart? Can someone tell me? What are we hanging around on the weekly chart? Let me get my soundboard out in case I get some class participation today. What? Not just the new week opening gap, but what are we hanging around? Not just the new week opening gap.
Equilibrium?
Nope. What are we hanging around? What do we talk about when you got a counter that looks like this right here? Long wicks and a little body right there. What
fair value?
We're hanging around. Yes, a type of fair value, but what is it? What are we hanging around? When you got a little bitty body with wicks on the top and the bottom. You're hanging around the what? You're not showing a willingness to leave or stay away from what?
The opening price.
The opening price. Very good. Shout out Jim. That sounds like Jim and Kashaya. And honey. Right? Yes. On a weekly basis, we're just kind of it's like we went way down here, we went way up there, right? But we still hanging right there around the algo does what it should do. Yes, that's very true, right? We're just hanging around that opening price. We're not showing a willingness to leave that area of a certain type of fair value, right? What makes that a type of fair value? Because that's the very first agreed upon price on the buying side and selling side, right? And then the last agreed upon price between the buying side and selling side. That's why that open, low, high, and close are so important, right? Because the open is the very first, like, this is fair value for this asset. The close is the last fair value for this asset. The high, that's the most someone was willing to pay for it during that dispensation of time. The low, that's the least someone was willing to sell it for during that dispensation of time, right? These price points are very, 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 very important, right? The algorithm uses these price points to do all this algorithm magic, right? But Tim, what do you mean? It understands, right, that at the low of this bearish new week opening gap, that was a very important price. That was a open on the weekly. It understands at the high of this weekly candle thus far, that was the most somebody was willing to pay. It understands at this low, that's the least somebody was willing to sell. So with that knowledge, it can do math really quick and say right here is equilibrium, right? It can do that math super fast and say equilibrium is right there because that's it. They can do it really quick, right? It uses these price points to do all of its algorithm magic, right? It knows based off that high and that low. This is equilibrium. This is the first quadrant. This is the top quadrant. This is this. This is that. This is this, that. By using the open, high, low, and close on everything. That's why it's very important for you to understand the open, high, low, close. And right now, whenever price is just kind of hanging around at that opening price, what are we doing? We just kind of stalling, right? We just kind of stalling. There's all kind of reasons that price will stall, right? But what is one of the most common reasons outside of technical stuff? What is one of the most common reasons for price to stall and just hang out in an area of fair value? What's one of the most common reasons?
Waiting for news.
Waiting on news. Very good. I heard a slew of people that said that. Shout out everybody who said it. Big news. And what big news do we have this week? Right? We have CPI. We got PPI. Right? CPI is Thursday. Right? We got FOMC minutes tomorrow afternoon. Right? Now the FOMC minutes is typically not as volatile as the rate announcement, the FOMC meeting. That's very volatile, right? But the minutes, it has the potential to move the market too, because the minutes is when all the professionals have fine-tooth combed everything that Uncle Jerome has said, meeting by meeting, and they say, hey, this is how the language changed since that last meeting. And depending on if the market if the professionals want him to be hawkish or dovish, you know what I'm saying? Depending on how they want him to act, if they want him to be aggressive or if they want him to be a little timid. If it changes in the wrong direction, it can create a dump. If it changes in the right direction, it can create a pop, right? So it has the potential to move the market, but it's not as aggressive as the actual rate announcement, right? So we got FOMC minutes tomorrow afternoon. We got CPI. That's the OG wig snatcher, right? That's the OG wig snatcher. Will snatch your wig off. And then we got PPI on Friday. PPI do a little something too, but FOMC meetings, CPI, don't non-farm payroll, them the ones everybody know. You will get your head bust to the white meat. And when you're coming up in front of big news, a lot of time the market will not give you a lot of sense of direction, clear direction. It will kind of hang out at some type of fair value, right? Not going to do it 100% of the time, but coming in front of big news, there's a likelihood for it to, you know, just range, go up, go down, go up, go down. Monday, the volatility was stupid. We were getting 150-point 1 minute candles on the NQ. It was stupid. I was telling the gang, if you trade one micro. Don't try to trade a mini. And speaking of, let me go full screen on this. Today, started last night. I go out there, I'm trading the micros. Trade one micro, you trade the micro, right? Trading the micros, doing my thing, made a trade last night, you know, successful. You know, made a few trades this morning, right? Had a couple wins, one loss. And then I said, you know what? The volatility ain't that bad. Volatility, it was high, but I'm crushing it. I was crushing it last night. I was crushing it this morning. So, man, I'm going to go over here to the mini in this account. You know what I'm saying? Make me some big money. Took a loss. How did I take a loss? Because that volatility was something. That volatility was something. Now, mind you now, on the mini, that stop loss got to get smaller. You know what I'm saying? Because you're going from $2 a point to $20 a point. That stop loss got to get smaller. Getting dog on trade. Whack out. Come here, stop loss. Whack out. Come here, stop loss. 2 stops. Hit the max. I got a max daily loss limit on my accounts. Hit them. I say, wait a minute, max. And then I remember, I'm trading the minis. That's how I hit my max daily loss in just 2 trades. I said, God dog it. Back to the micros I go. Right? Do not over leverage. The market will humble you quickly. Do not over leverage. Tim, you was on trading 1 mini. How is that over leveraging? It's over leveraging because my stop loss, I can't afford to make a stop loss big enough for the volatility that the market is experiencing right now on the mini. I cannot afford a 25, 30-point stop loss on the mini. No, sir, no, ma'am. A 25-point stop loss on the mini is $500. I'm not risking $500 on one trade. Not gonna do it. Right? But I can risk 25 points on a micro. You know what I'm saying? 25 points on one micro, that ain't about $50. You know what I'm saying? And a 25-point stop, if you need more than a 25-point stop, it look for another, that ain't no good trade to take because you risking way too much on the stop loss. You can find a better entry. Come down in the time frame or something. You can find a better entry on the NQ. You don't need 25 points on the NQ if you're entering at the right time, right? So just want to share that with y'all. What won't be prudent? It's moving a day's worth of movement in 5 to 10 minutes. I had to stay with the MES. The MNQ was even too much for me. Yeah, the volatility been crazy. The volatility been crazy. I've been and it's crazy because I've been going in my bag of tricks taking trades, man. I've been going in my bag of tricks taking trades because the volatility is so crazy. Let me share this with y'all real quick. The volatility has been so crazy. Let's go to the charts. Let me share my charts again. The volatility has been so crazy, right? Let's go to 1 minute candles, right? The volatility has been so crazy. Let me go to put this on so I can find the New York session. New York, let's go 90930. And let's just look at the morning session. We'll go from 0930 to 12. Hey, what's going on with my thing not showing up? Oh, that's this afternoon. That's why. That's this afternoon. Okay. Okay. This is this morning. And we slept the night away. All right, let's just look right here. Let's just look right here. Let's look right here. Let's look right here. Yeah, 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 yeah. Yeah, 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 yeah. Okay. So now today, volatility wasn't as bad as yesterday. But Tim, what are you doing over here? I'm showing you something. Now, as you see here, we come down here. This is like right at the 930 open, right? So at 930 open here, we come down, hit this fair value gap, right? We push back up, take out this high, right? And then we drop down, coming back to this old buy side, taking out this sell side liquidity, right? And then we displace away here, taking out the buy side. Now, once we see this move here, right, your first thought would be to get long off of this fair value gap right here. But look what happens. We get a deep retracement all the way back down to the order block, right? Propulsion block, actually, because this is the order block. That's a propulsion block. We come all the way back down to the propulsion block, right? Then we displace away, right? Now that we displace away, we have a fair value gap here with a volume imbalance there, right? So you have to mark out the fair value gap like that from there to there. That's a 23-point imbalance, right? That's a 20. That retracement stopped me out this morning. I'm not laughing at you. I'm laughing with you, right? That's a 23-point imbalance, right? So if you are thinking about taking this, right? Be honest. How many people is thinking about taking this trade after this just bust somebody in the head? Bow to the white meat, right? And then now, who's thinking about taking that trade right there? Okay, let's say you're super focused and disciplined and getting stopped out, don't shake you at all, and you're taking it right on the touch of that fair value gap. Now, what are you worrying about? The fact that we came all the way back to the order block this time. If you get into that trade right there, since you're worrying about that, now, what do you have to allow for? Even if you didn't get your head bust, what do you have to allow for? You got to allow for price coming all the way down because there's two imbalances on top of each other, right? So the minimum you have to allow for is consequent encroachment of the bottom fair value gap in this case, right? Below consequent encroachment, right? Below consequent encroachment would be around 54 points for a stop, right? 54 points on a micro, that's over $100, right? That's over $100 for one trade. Now,
hey, Tim, before you go on.
Hey, yeah, what?
I'm sorry, I'm outside if it's breaking up.
It ain't breaking up.
I hear what you're saying. I would think, obviously you just got busted in the head if you were in the other trade, but I wouldn't. I would think I wouldn't allow for price to come back there because you have that inversion inside of the gap above it, and that's would be my line in the sand, I guess is what I would be saying.
Okay.
You have that inversion. I mean, like I said, with the volatility, I guess that's what you're teaching.
Yeah.
You got the inversion, and then you have the other fair value gap right there on it, kind of like
what about this price leg? Now break this price leg down.
That's to me. That's a breaker within that price leg. You've taken liquidity with the other low.
What happened right there?
It got swept. That's your low, high, lower low.
This is your low. That's your high.
That's your initial, but can't you do a breaker within that price leg since that low swept the liquidity?
No.
You move. No?
Nope. Ain't no breaker right here.
Okay.
Ain't no breaker right there. See, that's what I be telling you. Don't look for everything everywhere.
Okay.
Because you're saying, oh, this is a low, this is a high, this is a lower low. That's not the way you look for ICT breakers. Right?
Okay. Even if the other one already, even if that price leg swept the liquidity, we allow. Okay.
What liquidity we swept right here?
Not that one. The one before it's allowing for that to be our protected low. And then, but I see what you're saying. Don't look for the breaker okay, gotcha.
This right here is our low. This right here is our high. No liquidity was swept there.
Okay, so no, don't look for it within that leg, even though that low I would have looked at as protected. Okay.
Yeah, you're looking for breakers in a place you shouldn't be looking for breakers, right?
Okay.
This right here would be your breaker because we came down, we went up, right? That's it. This high broke that low. We traded back above that high. This would be a breaker if it was going to be used as a breaker. We're not in here. That's why I say people be looking for break like, oh, I got a swing low here. I got a swing high here. I got a swing. This is a breaker, right? You're not looking for breakers everywhere. You're only looking for breakers for where price is moving. Just because it works and you be like, oh, it's working off the break. You're looking for stuff everywhere. And the reason I said break down this area right here, when we had this deep retracement, there was no reason for price to come here. Price had already showed you that it was done there. How did it do that? We had efficient delivery, right? We created a fair value gap. We traded into that fair value gap, displaced away, creating another fair value gap, giving you a break in market structure, right? So there was no reason for price to immediately come back down to that order block, right? Outside of just manipulation, right? This move right here said that I'm done with this area down here, but we immediately turned around and took out anybody who had a stop loss here. It immediately came back and manipulated, right? That's why I was like, break this leg down, because you were like, okay, we got an inversion, so it shouldn't come down. Okay, we just had a trade back into a fair value gap. It shouldn't come down.
Hey Tim, but isn't that the first fair value gap that it came down to?
Talking about right here?
Yeah, look like that's the first one.
Okay, even if it is, it came to it right there. Same thing. Even if this is the first fair value gap there, it came to it right there. It's the, I don't care which fair value gap it is, it don't negate the fact that we used it, displaced away, and then completely ignored this right here and came all the way back down to the order block.
Okay,
right?
gotcha.
That right, that if price does this, then it should do that. You see what I'm saying? It shouldn't do this and then do that, right? That's manipulation. You see what I'm saying? It's going against what the algorithm should do. That's manipulation. Right? Everybody understand that? Like, this is good dialogue. This is good questions to ask. This is good stuff to look at, because you want to focus on algorithmic signatures, not what I feel like it should do, not what I think it should do. What, based off of algorithmic signatures, what should price do and what should price not do, right? What should it do and what it should not do. And anytime it immediately comes back and takes liquidity like that, after giving a signature of wanting to continue or go a reverse or whatever, that's just manipulation, right? It's just manipulation. And then when we look at it, this is right there. The macro starts here, right? The macro starts there, right? And what's the macro's job? The macro's job is to spool to imbalance or liquidity, right? So if the algorithm, right, if the algorithm took out sell side, right, came and took out buy side, right, and it was retracing back into an imbalance, right? Here's your imbalance that you retrace back to there. Boom, right? Now it's time to go back up, because it's you see that it wanted to go up, right? In hindsight, you see that it wanted to go up, but it came down here first, right? Trading all the way down here. Now at 950 to 1010, if your job is to spool to liquidity, spool to untouched liquidity, right? If it was truly bearish, right? Because this low took out that high. So when you came and took out that low, that's a bearish break in market structure, right? So if it's actually bearish, you got liquidity sitting right there that you could spool to if you're actually bearish. But no, right? We turn around and spool back to the buy side, right? Immediately. Spool up there immediately, right? Within 3 minutes, right? 1, 2, 4 minutes. With less than 4 minutes, we back at the buy side when you got sell side right there after a bearish break in market structure. You see what I'm saying? Just clean, plain manipulation. Nothing you can do about it. It happens to the best of us, right? Now, what I was saying was, this is a huge stop loss, because you got to allow, even if it's not highly volatile, you got to allow for price, if it wants to reach down into this lower inefficiency, right? Because we see over here, we got deep retracement there, right? We got a lot of back and forth, all this right here, a lot of back and forth overlapping candles, right? A whole lot of back and forth deep retracements. So when you get over here, right, there's nothing in the world that's going to make you be like, hey, we're not going to have another deep retracement. When you're sitting at that hard right edge and the candles look like this right here, right? When you're sitting there and the candles are printing and it look like this, right? You just made that deep retracement and then you start going up, right? You go up there, right? Now you got this fair value gap there, right? There's nothing in your mind that says, okay, we're going to trade back to this fair value gap and then keep going up. We're not going to do another deep retracement, right? It ain't nobody on this earth that's going to say that. Why? Because all we've been doing is having deep retracements the whole time, right? And if anybody get on here and lie to you and be like, oh, I think it's going to stop there, hey, more power to you if that's how you feel, right? But just me watching these candles every day, I know when I'm seeing it just do this, I wait for extra confirmation, right? I'm waiting for extra confirmation, right? Now, let's put the meat back on the bone. And I was just saying that to say price has been so volatile, right? Price has been so volatile that even if you're trading micros, and remember what I said, today wasn't as volatile as yesterday, right? And we see right there, just off that one example, if you took a trade off the first touch of the fair value gap, right, to come to the mandatory stop, right, it's 41 points to the mandatory stop, right? Below consequent encroachment, over 50 points, right? Down to the safe stop, over 100 points, down to the safe stop. And this is just for a small little fair value gap on the 1 minute time frame, right? On the 1 minute time frame. So from the open of this 951 candle to the close of this 959 candle, price moved over 150 points, right? It moved over 150 points in 10 minutes, right? Very, very, very high volatility. Very difficult to try to trade minis, right? If you trade in minis in conditions like this, right, you have to have a very high risk tolerance, right? You got to have a very high risk tolerance, right, to properly place your stop. Okay, getting picked up, like you wouldn't even got picked up if you waited for it to touch the high of the fair value gap. But you got to incorporate the entire inefficiency. You got to incorporate the volume imbalance in this case, right? And to put on a mandatory stop, which would be the low of the candle where the inefficient, where the BC is, that's 39.5 points, right? 39.5 points with one mini is 790 points. I mean, $790 on a stop loss, right? Super over leveraged. Super over leveraged. And then let me show you how I'm out here trying to trade with a mini, right? If I come here, look at that stop loss. Look at that stop loss. Trying to trade. Y'all probably can't even see it. Let me thicken up this line so y'all can see how I'm out here. Matter of fact, let me do it like this right here so y'all can see. Right? I'm out here like this. Uh-oh, wrong one. All right, this the top, this the high of the fair value gap.
We're not seeing your screen, so we can't see it no matter how thick it is.
I stopped sharing. I just stopped it. I just stopped it out. Y'all want to see my screen the whole time?
I could see it.
Yeah, I see it. And then what's this? The Zoom.
Cause I stopped it for a second, but I thought y'all could see it. Yeah. Jim, where you at?
Well, I can see it now.
Hold up. Let me run this back. Over leveraged. And then let me show you how. Yeah, I can see it. I just looked at the YouTube. I can see it. I just looked at the YouTube. Yeah, I can see it the whole time. Maybe you had it hid. Okay, so look at this stop loss right here. Somebody come look at this. Somebody come look at this. Instantly. This wasn't a trade, but this is how the stop was. Right? Soon as you get picked up, stopped out. Instantly picked up, stopped out. Right? Because it's a mini. And if it's a mini, that's almost what's that? Like almost 200 points. I mean, almost $200. $175. That's almost $200. You see what I'm saying? That's almost $200. Pick up, stop out. Quick. Trying to trade a mini. Now, my other accounts, I was trading micros. One micro. Knocking it out the park. I think one trade I made like $200 and some dollars. One trade I made, like the last trade I did, it was like $100, right? But if I got stopped out in profit, you know, so I got stopped out in profit and it was like $100. And the micros make money, man. Let me see here. Come here, you. No, that's the wrong day. Did I just close Discord? That's it right there. Right there. All right, that was the last trade of the day right here. This one here, that I took a trade off the high of that fair value, that inversion fair value gap right there. Right. And then I'm not even sure if it was an inversion yet because I was watching the 1 minute, but we had got below it, and just based off of how price was trading, and I typically, you know what I'm saying, what price typically does, right? I said, I'm not going to get short on this bearish order block. I'm get short at the high of the fair value gap, right? And I was like, I'm just putting my stop above here, right? I'm gonna put my stop above there. But this retracement back here, it stopped me out because I think I had brought my stop once I got down this far. I think I brought my stop over here somewhere by like one of these inversion fair value gap there. I think it was this one because I didn't bring it down here because we came down to that area there, right? And what really pissed me off about this trade, when I initially got in it, my stop was just above the low of this fair value gap right here, because that was just below equilibrium, right? That was just below equilibrium. That was my initial point. And then I said, well, price has been very volatile. Once I got in, this has been pretty volatile. So I moved my stop down to the low, right? And then when price came down, it blew straight to my original target. And then I moved my stop. And then this retracement came back and stopped me out in profit for that 109. But this was the one here. Two trades, lost quick. Two quick losses, right? And I was trading them based off of price action. It wasn't like a fixed amount. I was trading them based off price action, but it was the smallest entry I could afford to take on a mini. And got me. The first time got me instantly. The second time, it started going in my direction, and then it came back and got me. Out of there, gone. Right? But $300, $270, $78, $109, right? One micro. 1 micro, right? 1 micro. That's it. And now the 300 and the 278. The 278 was one. No, the 300 was 1 trade. The 278 was 2 trades. And then the 109 was 1 trade. And then the 393 lost, that hit my max, lost for the day and locked my account. That account right there, that was 2 trades on the mini, over leveraged, right? That's over leveraged in these conditions, right? You say, Tim, 1 mini is not over leveraged in these conditions. Because if you think about it, right, if we come here and look at the required stop for this right here, that's the mandatory stop, because that's your imbalance. That's the low of the candle that the imbalance is. That's where you got to go, you know what I'm saying, at least, you know what I'm saying, right? That's the mandatory stop, and then that's the safe stop down there at the swing low, right? 105 points, right? Way over, that's way over leveraged for a mini, right? You don't want to be that guy or girl that says, hey, look at here, I got a 20 point, I got a 25 point trade on the mini, but you was risking 30 points to get that 25, right? You was over leveraged. I got a 100 point trade, but you was risking 25 points to get the 100 when you can't afford to lose 25 points, right? Don't get into the mindset of, oh, I'm trading a prop firm. It ain't no big deal. You know what I'm saying? They giving me 2,500 max drawdown before I blow the account. So I'm gonna risk 2,500 on every trade. Don't do that. Don't do that. All right. Enough of me flapping my gums and
Hey,
ranting.
can I describe why I expected price to come back to that order block?
Yes.
If you go to 4-hour candles first, got to go to the current day. Okay, what I did was this morning I was expecting price to try to reach for the top of the wick from 10 a.m. yesterday. Yeah,
Here.
see how that wick went right up there?
Mm-hmm.
So what I did was I drew the CE of that wick,
Okay.
just the wick part.
Yeah, I got down like I had it on the daily wick.
Okay. All right. Now, if you go back to the 1 minute, or today at around 9:50 a.m.
Yeah, let me hide some of this stuff so I can see. All right. You said 9:50.
This morning. Okay, yeah, it's right, kind of right there. You'll see that the low that took the liquidity there just tapped right below that CE of the wick, or CE that we drew there. So when price went up, I was expecting that price might come back down to that order block. And that's where I had set a limit order for a long trade there.
Yeah, off the order block right there.
Yeah, because we had dipped right below the CE there, and we took some liquidity there. So I was seeing that as kind of like the discount of that wick.
Okay. And you took an order block trade right there.
Yeah.
Okay.
So,
makes sense. Yeah, that makes sense. Off of the trading off the order block there.
because that was the where the liquidity was taken, and that started to move there after dipping below the CE of the big wick from yesterday's fake news.
Mm-hmm.
So
yeah, that makes sense. That's a good read on price to be look. Even
But-
if you're looking at the order block or the propulsion block, that's a good read on price because it came back down to the order block there, right?
yeah,
And that's
but that was part of my narrative for this morning,
yeah.
was to reach back up to that wick, which we just barely touched it, and then we dropped from there.
You said
Like at around 10:30 in the morning, we reached that high that matched the wick from yesterday.
Oh, you talk about like reach up here to the high.
Yeah.
Up to the high of the wick. Okay, yeah. You talk about to the high.
Yeah.
Yeah.
That's almost to the tick of where we were yesterday at the 10 a.m. high.
Mm-hmm. Yeah, I mean that's a good that's a good strategy based off of trading order blocks, right? That's a good strategy based off trading order blocks, especially during high resistance or like super volatile markets, right? Because price tends to stretch back to the order block. You know what I'm saying? It tends, y'all hear me say it a lot where, you know what I'm saying? I don't want to see price digging all the way back up there to that order block up there. Right? I want to see it hit it and keep going. Right? When it dig all the way back down to that order block, that's too much of a retracement for my taste. That's not exceedingly bullish or bearish. Right? I want to see it. I want to see it hit just like here. It didn't make it back to the order block. Right? This time it went all the way up to almost to the high end of the order block. Right? This time didn't make it back to the order block. Didn't make it back to the order block. This time we trade all the way back up to that order block right there. Right? Push through this one and went all the way up to that one. Right? I don't like to see it digging all the way back up like that. Right? It can, you have to allow for it, but I like those quick moves. And then this one here, this was coming into the macro time, right? This was coming into the macro time, and then the macro time kicked off as it got to the order block, and we took off, right? But that's a good analysis. Now, my question is, right? I know you said since we dipped below CE of the wick, right? What about dipping below CE of that wick and then taking out liquidity? What about that? Like, made you say, okay, we're coming back to the order block? Is that like something that you've just back tested and saw, and it's like just a high probability, or what about dipping below CE of that wick made you say, okay, we're coming back to that order block?
Well, it was part of my narrative that we were trying to reach for the high of the previous day.
Oh yeah, I got that. I understood that part, but just here, because it's like you was like, since we just dipped below CE, I anticipated us to come back to the order block. What about dipping? Because that's just, I'm asking because that's nothing like in my notes, my millions of notes. That's not like something that I've put together based off of like back tests. And that's why I was like, what about that made you say, okay, we're coming back to that order block? Right? Because most time when I'm looking for price to come back to order blocks, right, it's based off of like other things, right? It can be like if we've failed to if we failed to like create like a significant displacement, right? We don't have any imbalances to come to, so I'm looking for it to come back to the order block. Or if we've gone up and set like relative equal highs or set relative equal lows and we're retracing back, I'm looking for it to come to the order block. Or if I'm on a really low time frame, right, I default to the order blocks over the imbalances. Or if I'm, you know what I'm saying, these are like different things in my experience, like when I default to the order block, right? That's why I was asking, what about just dipping under that CE and then taking that liquidity, made you say, hey, yeah, I'm gonna set my limit at that order block? Or was it because we have been doing so many deep retracements, you said, okay, I'm gonna enter at the order block? Like,
well, it's a combination of all of that. But the other thing is, like you said, that's where my entry would have to be to have a reasonable stop loss.
yo, that
So-
was my last thing. I was like, was that because that was the only place you can get it and have a reasonable stop? That was gonna be my last thing.
So it's either I'm going to get that trade or it's going to go without me.
Okay. All right. All right.
You
So
know.
it was like a stop loss led thing. Okay. All right. I got it. I was just trying to see if it was something that, because I was about to take a note, but it was like
But,
a stop loss thing.
I mean, it's a combination because, you know, we have high volatility. And so, you know, I figured there's a good chance it would come back to the order block there.
Y'all shout out. Hey, y'all, hey, the jig is up. Somebody told me today that Jim is actually Michael Huddleston under a pseudonym, under an assumed name. He's in the group under the assumed name as Jim, and it's actually Michael Huddleston, and he's changing his voice to sound different, and he's just in here hanging out with us because he know too much. He know too much about how price works. The jig, somebody told me that today. The jig is up. Sorry, you've been discovered.
Good job, Jim. And that piece of price action that he's talking about, like he said, that would have where he would have to have a reasonable stop. And since that was part of forming the breaker, and that leg displaces back above it to form the breaker, is that not a spot you have to allow for price to come back to?
You talk about here?
No, the piece of price, yeah. You said that was the breaker because I was earlier talking about the other 20. You said that's not. So you went to your left. That was your low, your high, your lower low, and then we formed a breaker on that displacement leg up. So yeah, like even that. With that breaker, yes, isn't coming back to the order block that Jim took the trade, where we do have to allow for price to come, at least have to consider price coming back that low.
No, if you're looking for the breaker, if you're looking for price to use this as an ICT breaker, you don't want to see price coming down here.
Because yeah, I get that, but you still have to allow, even if I say I'm doing break.
No, I'm saying that's what I'm saying. If this is going to be used as an ICT breaker, right, it's not going to allow for price to get down here, because the breaker, the mitigation block, whatever's here at this old high, whatever's sitting here, its job is to stop people who got short, like down in this area here. Its job is to stop them people from mitigating their losses.
Even though those other 3 candles make up the complete order block and the breaker is within that, you don't allow for it. That breaker has to stop it even within that order block. Okay.
Yes. Because the purpose of the breaker, right, is to trap people short. You see what I'm saying? The purpose of this move here, that's to trap people short. So if you trap traders short here, right, the algorithm is not going to allow for them to come back and get out at break even. You see what I'm saying? It wants to keep them underwater. That's why using an ICT breaker, that's why you take the opportunity to get long here, and at the most, if there's an inversion fair value gap here. You see what I'm saying? Like the inversion fair value gap is going to allow you to get a deeper retracement, but anything that's down here next to the low that this breaker broke, right, price should never come back there, because the trap traders are being allowed out now. They're not trapped. You see what I'm saying? So if it comes back down there, right, then it's not using an ICT breaker. It's using something else, like a, you know what I'm saying, order block, right? And then if you take a trade off this breaker and you put your stop down there, right, you just got lucky, because it's not using that breaker, right? Because if you take this breaker, your stop should be there. You see what I'm saying? Your stop should be there. Why? Because that's the swing low, and is it the swing low and the low of the breaker? Actually, you see what I'm saying? That's where your stop should be there. And if it comes back down, if you put your stop here, your stop is just too big, and you just got lucky because it's not using that as an ICT breaker, right? It's coming back down to this propulsion block over here, right? Because an ICT breaker is designed to trap traders and leave them trapped. That's why you enter up here, right? If it was gonna come down here, back down in this area there, then it taking the trade off the breaker up here wouldn't make sense. And then that's why he say if it's a inversion fair value gap inside the breaker leg, then that will allow for a deeper entry because you're not going down to where the traders are trapped at. You're coming down to a, an acceptable point within the breaker to get picked up. All right. Do that make sense to everybody? Anybody lost on that?
The other reason why I didn't think it was going to go further down is to the left, we had an immediate rebalance.
Over here?
At the 908 candle, somewhere there. Yeah.
Oh, right over here. Like that. Here.
Yeah, we rebalanced that, which could have been a big fair value gap, and then we moved away from there.
It came down and went up there. And then,
Plus, there was the high at around 811 that we had come back to.
Yeah, we came back over here to this area there, right? Fell just short of that right there, right? But we did tap into, we didn't even tap, we tapped that, right? We tapped that high right there of that down close candle there, right? And then if you look at this right here, all of that right there, all those consecutive down close candles there. Once we trade back above that opening price right there, right, we got a heap of order blocks. But this right here, you know what I'm saying? You can see when price, you can tell when price, like these down close candles, that pop, down close, that pop, you know what I'm saying, that pop, then we start going up. That's how you can tell. We always talk about smart money is buying when price is going down, right? And you can see these little pops. You see what I'm saying? You can see these little pops when they come back up. And then when price trades back up, back into those, we talk about reclaimed order blocks and market maker models, right? When you come back down to those order blocks that create those little pops, right? Price will trade off of it, but that's not how you trade that's not how you trade the reclaimed order blocks like that. You be buying it off of the opening price, right? You be buying it off the opening price of the order block. That's how you trade them, right? But in this case here, it traded into the highest wick of it there. You know what I'm saying? But that's how you look at like the reclaimed order blocks, because whenever price is bullish, when it's going down, you'll see price make these little pops, right? It'll make these little pops. And then when price trades back down, once you get back above that bullish order block over there, you look for price to trade back down into it and buy it. That's what, like when we talk about the market maker models and we talk about like reclaimed fair value gaps, reclaimed order blocks, right? When we talk about reclaimed order blocks, where if you look here, let me find this. If we look here, right? So let me drop this here for a second, right? All right, we got this market maker model here, right? So as price is going up, right, over here, you create bearish order blocks over here, right? Price will go up, then it'll drop. It'll go up, it'll drop, it'll go up, it'll drop, it'll go up, it'll drop, right? Those up close candles, when it's creating them drops like that, right? Once you trade back above those candles, right? You now have bearish order blocks, right? So when you get on this side of the market maker model and you get below those bearish order blocks, right? When price trades back up to it, right? You're looking over here on this side, and at the last up close candle inside this bearish order block, that's a reclaimed order block, and it sells off, right? It's because as the price was going up, right, smart money was selling. It went up, we had a drop. It went up, we had a drop. Went up, drop, up, up. Then we come back down, and you get up under those order blocks, right? It reclaims them. Right? Reclaim those order blocks right there. Right? When it comes back up into those order blocks, right? We come in here, this one here, get over here, right there. Right, reclaim last up close candle, right there. Right, so this price move there reclaimed this order block, right? This move there reclaimed the very next one, right? So reclaiming those order blocks. Right? We talked about reclaim order blocks before. Don't ask me how I got on that just now, but hopefully somebody learned something out of that. Reclaim order blocks, that was in, what was that in? Was that in the auto reading price action? We talked about it a couple times. I don't know. It's been in, anytime I talk about market maker models, I talk about reclaimed order blocks. All right. I'm so distracted. I'm very well now. Hopefully y'all getting some out of this tonight, man. Let's go look at the 15-minute candles, and let's look at the price action throughout the day. All right. This is where we opened up here. We had a bullish new day opening gap. What is this? What that is. Get some stuff out of the way. Right. This one we opened up here. We opened up just above equilibrium of the overall dealing range. Right. That's equilibrium there. You probably can't see it. It's a very faint line. That's the low from October 2022 to the high of December 2024. That's the dealing range that we're looking at. We're right there around equilibrium, right? So we are hanging around that equilibrium right there, hanging around fair value, hanging around. This right here is the open of the week, right? All of this is in close proximity, right? When you think about a range from December 2022 to October 2022 to December 2024, right? All of this right here is close enough for government work, right? That's all inside the range. That's all hovering there around this fair value, right? In front of this big news, okay? So we opened up here, and you can see we traded, right, in this range there all the way up until like 7:15 in the morning, right? Until 7:15 in the morning. It's a decent size range. This is the highest peak. That's the lowest, right? Deepest size, decent size range from peak to trough, 266.5 points, right? So it's a decent size range, tradable range, right? I traded in it last night. Tradable range, decent size range, but in the overall scheme of today's price, right, it's just some consolidation. Okay, it's just some consolidation, right? So in the sense of the day, right, in the sense of the day, was today a power of 3 day? Right? What's today a power of 3 day? In the sense, this is where we open and this is where we closed. What's today a power of 3 day? Yes.
No.
Yes,
No.
it was.
No.
Yes, it was.
No.
Yes, it was. Yes, it was. Yes. Shout out all the people that said yes. And shout out the person that kept telling me no.
I say yes.
Yes, it was. And honey, it is, but not just because it's an open, high, low, close. Right? Not just because it's an open, high, low, close. Right? Right? It's a power of 3 day because, right? We had accumulation, we had manipulation, and then we had distribution below this low over here. Right? AMD. AM come below this low D, distribution below that low, right? You accumulate it, you manipulate it, leading people the wrong way, right? Then came the right way and distributed below an old low, right? Distributed below an old low. Okay. Yeah, and it's not just because it's an open, high, low, close candle, because you can have an open, high, low, close candle or an open, low, high, close candle and it not be a power of 3, right? Because the open, high, low, close candle just means that it's a bearish candle, right? Because it's just saying you open here, you made a high, you made a low, and then you close there. Because it comes, the name comes from like the bars. Because with the bars, it go from left to right. So it'll be the open, the high, the low, and the close, right? And then it'll be the open, the low, the high, and the close, right? That's a bullish bar. That's a bearish bar, right? So you can have those bars or candles and it not be a power of 3. The only way it's a power of 3 time frame is if you have the AMD in there. You got to have the verb for it to be the noun. The power of 3 is the noun. The AMD is the verb. This verb creates that noun. So we just kind of hung out, right? We hung out in this area here, right? In this area right there was a very sensitive area of fair value to the algorithm, right? The reason why I say it was a very sensitive area of fair value is because not only is it right there at the equilibrium of the range, right? It's also the place where we got our true day open, right? Our true day open is very, very close to that true day open. All right, right there. So we got our midnight price, which is our true day open. And then if we look at this area of consolidation, right, this the whole range, not because we gapped down there, right? I mean, we gapped up, right? We gapped up there, right? And for this whole little area there, we actually got another little wick, right? Right over here, right? That you can count, right? We got another little wick right over there that you can count, right? But you see, we're still right there because that's the lowest wick during this time. I missed that wick with this one here, but it's still, that's right there at our true day opening. Then when you see we went up to that area, passed it, came back to it, passed it, went back to it, passed it, came back to it, hung there a little bit, went back down, came back to it, hung there a little bit, went back up, came back down. You know what I'm saying? Just hovered around that price there, right? Displaced the weight, blast off, took off. came back down to it, got below it, traded back up to it again, dropped down, traded back up to it again, right? Dropped down, didn't make it that time, right? And continued down. But we kept coming back to that area of equilibrium throughout the entire day, right? Throughout the entire day. Consolidation is paired with equilibrium, right? And we stayed there from that equilibrium was intact all the way up until 7:15 where we blast off, and then we kept drawing back to it throughout the rest of the day, right? That was a very sensitive area in price to the algorithm, right? And then as we see, when we say price is unwilling, when price is unwilling to trend, if it's just kind of hanging out, what do we say? The new day opening gap and new week opening gaps act as magnets to price, right? Once we manipulate it up, right? Where did price draw back to? Came back to the new day opening gap, right? Pushed back up, traded back up into the balanced price range, dropped down, trading back toward the new week opening gap, pushed up one more time, right? Because now we've traded away from the area. Now we're trading back to it, right? This move here, right there, that's like a first touch. But once we trade away, trade back, right? Now, boom, back down to the new week opening gap, right? Get down here below the lows, right? Below the lows. Then we trade back up, heading toward the new week opening gap. Don't quite make it. Trade back up to the fair value gap. Then we just close, hanging out there near the weekly open right there. All right, but the low of that new week opening gap is the weekly open. All right. So as we see, price was hanging around some type of fair value all day, right? Equilibrium here, right? We got a bullish new day opening gap, right? So that's the high of this is the first agreed upon price, right? First agreed upon price. So we got a little candle that's just hanging around that opening price, right? That's the first price of the new true day opening price. Price is just hanging around that opening price, right? We displace away, we come back down to that opening price from the day, right there. Boop, closed right there on it, right? Hang around that opening price, drop down, right? All the way down to the opening price on the week, went down below it a little bit, traded back up to consequent encroachment, and then closed right down there. Price was just hovering around all these areas of fair value. You know what I'm saying? Unwilling to leave the range, right? Unwilling to leave any type of range, unwilling to give any type of significant move in any direction. Only time it gave a signature like it was going to go somewhere was during the manipulation, right? And then I know from when I sent the screenshot, it was after we had got up there and started trading back down, right? I was looking for shorts over here. I was no longer looking for longs. I was looking for shorts over there because I was like, hey, that right there, that's going to be it. Why was I thinking that? Right? We had bearish divergence up there. The overall time frame was bullish, and we have been unwilling to leave these. We had a cluster, as Michael liked to say, of new day and new week opening gaps below price. We were unwilling to leave it, so I'm anticipating price drawing back into it, right? Anticipating price to draw back into it. And I think this right there was the 15-minute fair value gap that I traded off. Yes, that is right off the high of it right there. Right. Once we went up, right, came down, right, closed below it, traded back up, right, failed to get up there, right, dropped down, wick all the way below, right? Taking out those lows on the lower time frame, that's sweeping liquidity, right? We got this long wick there, closed at the high. Okay, I want to get short on the high of this fair value gap right there, right? Because I'm seeing that as the manipulation. We got a, right? We traded below that low, right? Traded, God dog. We've traded below that low. We got a change in the state of delivery right there. Right, change it. We've traded up into the change in the state of delivery. Right, we dropped down, took out lows. Now, because we're having these deep retracements, I'm getting short off the high of the inversion fair value gap. You know, 1 minute time frame. That's what it looked like on the 1 minute time frame, right? Right, that's what it looked like on the 1 minute time frame. Yeah, we had our S&T. Okay, we come down there, breaking market structure. Right, came down, got our breaking market structure. Right, we traded back up into the change in state of delivery. Right, traded up into the change in state of delivery, break down, take out the sell side liquidity. Right, and come back up, get short. Right, off the high of the inversion fair value gap right there. I didn't want to get short off here, right? I wanted to get short off the high. Why? Because we had been overreaching everything throughout the day. And that was the last did I close my Discord again? I think I closed my Discord again. And I was still sharing. Yeah, that right there. That trade right there. That's right. Right. Yeah, right. And get you on. All right, that's all I got, man. Do anybody got anything? Hey, Rhonda, don't be retracting no messages. Say it with your chest. Y'all, what Rhonda said? Was she retracted a message? What did she say? Say it with your chest. Don't be retracting no messages. Y'all got anything for me? It's 7:45.
Appreciate you, Tim.
Oh, man, I appreciate you for pulling up. See what? I appreciate you for pulling up. Go ahead and stop this over here. Shout out to everybody that signed up for the Conquering the Asian session. Right. Shout out to everybody that signed up for it. Like I said, as of this morning, there's only 8 slots left. Right. There's only 8 slots left. If you'd like to participate and you're not in the gang, there's a link pinned to the top of the chat, wherever that is for y'all. I don't know where it is at top of the chat. And then the first link in the description of the video is a link for signing up for the Conquering the Asian session. If you're in the gang, do not use that link in the description. Do not use that link that's pinned to the top of the chat. That link is the public link, and it is $250. If you're in the gang, your link is in the announcement section of the Discord server. Right? It's in the announcements channel of the Discord server. Your link is for $100. Right? There's only 8 slots left. It'll be on sale until April 30th or until all of those 8 slots are gone. Right? April 30th or until all of those 8 slots are gone. Right? So if you think it's something that you can benefit from, hey, sign up. Who is it for? It's for people. Somebody just messaged me and said It's only 7 slots now. Somebody should message me and say it's only 7 slots now. Let me see. Let me see if it's cap. I'm fun to see if it's cap or if it's real. Hold on. Let me see. Oh my goodness. Oh, let me see here. Conquer the Asian session. Let me see what it says. It says only 7 slots. Only 7 slots left. So it's only 7 slots left now. So it's only 7 slots left for the Conquering the Asian session. So it'll be on sale until April the 30th or until those 7 slots are gone. Right? Who is it for? It's for, I got a fancy, let's go to the fancy page. I got a fancy page where I use the algorithm to tell me, to give me a I told it what I wanted to say, like who is it for? And I asked the algorithm to give me some fancy bullet points. Come here, WAP. Your WAPs. Conquer the Asian session. Give me the link. All right, now. All right, let me share my screen again. All right. Okay. Conquering the Asian session. It's public. It's public link. Stop missing out. Your path to Asian session trading success. For 2 intensive weeks, join me in a live interactive video conference designed to transform your Asian session trading and capitalize on the market's overnight movements. All right. Other offers. Learned. Oh, that's learning. That's learning. Okay. All right, there. Who is it for? Individuals with limited daytime availability, full-time professionals seeking to supplement their income, those looking to diversify their income streams beyond their job, full-time employees aiming for financial independence through strategic market participation. My reading, stop reading in the middle of that one. Working adults eager to gain financial literacy and trading skills. Individuals interested in learning how to trade outside of regular business hours. That's who it's for. I say, hey, these are the people that I'm targeting right here. Give me some nice bullets. And it gave me a bunch of bullets, and I like those the most. AI is taking over everything. See there, only 7 slots left. $250. Hey, come out, come and hang out with us, man. Come and hang out with us. Hey, man, that's all I got. I don't see anything in the chat. I don't see yes, what? I see yes. What's that yes to? I don't see anything in the chat. I don't see no one's. I don't see anything on YouTube, I don't think.
That was when you was asking Power 3.
Oh, I said that during the boot camp back in the day. What'd you say back in the day, 80? Y'all shout out 80. I ain't seen 80 in a month of Sundays, man. Where you been, 80? ain't seen 80 in a month of Sundays. We just had a first Sunday Q&A Sunday. Was you in that 80? I didn't see you in that 80. Were you there Sunday? If y'all don't know 80 was in the boot camp. 80, you still got access to the first Sunday Q&As. You still got access to the first Sunday Q&As. There's a few things you still got access to. First Sunday Q&As, and then the amount of spots left. Oh, you've been working. Okay. All right, man, that's it.
Tim.
Yes.
Not long question. Like you said, those categories for the Asian session, for those people who don't fit into that, don't forget to say that it's gonna add to their other knowledge or something like that, right? Because if you don't fit into one of those 3 categories, we're gonna gain what? I believe in you. You know I'm coming. I'm just saying in case nobody in the gang and they think it doesn't apply to
them. Okay.
No, I'm saying say something else that even if this doesn't apply to you, you will gain that. You just said okay.
Okay. It will speak to who it needs to speak to.
Perfect. And period.
That's it. How my buddies doing?
They good. They all at soccer practice, so they good.
You at soccer practice too?
Yes. Of
Okay,
course.
I hope so. But I was about to call D fast. Keep my speed down.
I'm here.
Hey, you told my friend to draw my picture.
Yeah, I'm gonna send you a couple more. She did some stuff. I was like, you really did this? I gotta send you a couple more of her pictures.
Okay, make sure you do that. Make sure you do that. All right, y'all. I'll oh, my homeboy son joined the military. Okay then. Man, you know you're getting old when your homeboy kids joining the military. All right, man. Tomorrow is what's tomorrow? Tomorrow is Wednesday. So Diamond members, we got price reading, tape reading at 9. All right, we got tape reading at 9, and then Diamond members and mentees, we got Q&A tomorrow night, Wednesday night. It's like homework review. You just typical Q&A now because ain't nobody doing a whole lot of homework. Diamond members, we had the dealing range lecture. The monthly lecture last week was on dealing range. So if you got any hard-hitting questions about that, pull up with them questions tomorrow night because that's the last lecture we went through, right? Pull up with them questions if you got something on there, if you've been, doing homework on that. If not, mentees, y'all ain't gonna have nothing about that dealing range stuff, but just pull up with your hard-hitting questions anyway. And I'll see the rest of y'all for the price action recap at 6 if I don't get busy. Y'all take it easy, man.